Speaking of revenue, look at the excellent growth Salesforce has demonstrated over the previous decade, increasing their revenue from $5.4 billion in 2015 all the way up to $35 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of over 23%. What's more, the management team expects these good times to continue. They forecasted that revenue will surpass $60 billion by 2030. So management is expecting revenue to roughly double from where it is today. That would be a phenomenal growth rate, especially because this is growing revenue on a larger scale. It's easier to grow revenue when you're a smaller company. It becomes more difficult to grow revenue when you're a larger company because you're now adding billions of dollars to sales when you already achieved $30 billion in sales over a previous 12-month period. Now, that remains to be seen if the company will indeed achieve those optimistic forecasts. The stock market has a question mark out. Now, the company has done a lot to improve profitability, especially since 2022. And the big difference came in 2022, if you recall, and this was true for a lot of tech companies. But if you recall, in 2022, inflation was getting out of control. The central bank in the United States undertook an aggressive interest rate increase campaign that increased the fears in stock market investor minds about an oncoming recession. And so tech companies, mostly tech companies and more companies beyond tech, started preparing for a recession or at least an economic slowdown. Salesforce was one of those companies. So let's look at valuation. The stock is trading at arguably the cheapest valuation it's been trading for in a very long time. The forward PE ratio at 19.4 is near the lowest it's been all year long here in 2025. And I can show you a chart going back longer, and you would still see that this stock has rarely ever been cheaper than where it's trading for at its current price. Some of the reasons why it's trading at such a cheap price is because the market is not convinced that Salesforce has done enough in artificial intelligence. So we looked at valuation on a forward PE basis. The valuation, according to my proprietary discounted cash flow model, also demonstrates that the stock is undervalued. The intrinsic value I calculated is $339. The current market price is $232. Even after applying a margin of safety, Salesforce stock looks undervalued. So if you're interested in buying the stock ahead of earnings, I think it's undervalued enough where it makes sense to do so. Click the link below to watch the full video.